Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is the middle of the week. It's Happy to Hump Day. What do we have going on today? Saw something interesting about China's president for life is crashing property market, preparing for war. Wow, that's a strange one. I rarely hear right out. This is by one of the big finance guys, Kyle Bass. He's always involved in the Chinese market on the short side. He's a big shorter of the, and obviously he's been more right than wrong because we know that it's off by over 50%, if not more, 60% or something like that on from all-time highs. So it's kind of like that Citibank and Deutsche Bank and and all these other banks and Credit Suisse and so forth and Lloyd's of London where they're just pretending to be existing or something of that nature. They just kind of function on, they're hoping to grow out of it over the years. But the crashing of the real estate market, that seems odd. They say the system's just over leveraged. And we talked about it yesterday about the idea of fixed markets versus free markets. And, I guess we're following up on that. Didn't really think about it until about 3 or 4 minutes ago when I saw the headline by Kyle Bass, one of the bigger and longer old hedge funds out there. But that seems to be the, I guess you call it the recipe. That's what's really going on. Is it there's a lot of leverage in the system, and that's why they try to fix markets. They try to create stability, and that's really what that is in the end result, is the attempt to create a stable marketplace so that good and bad, or profitable and unprofitable managers all stay in their jobs. That's really what it comes down to. It's the strangest thing of all, isn't it? You're really bad at investing. Oh, good. We'll let you run another $100 billion worth because, it's some type of positiveness, friendship, some type of connection or friendship or stability. In other words, they don't want any real change, And unfortunately, life is full of change. That's what life's all about. So in the end result is that the real estate market really is the key. They look at the employment market. We're looking at all the stability that we have, and people are impressed that the real estate market is not that damaged as much as it's trying to be damaged. And then at the same time, employment is pretty good here in the States, and obviously since we're the engine that pulls the global train, I guess you could say, that it becomes just kind of that's the whole process. And the end result is, will we see a better economy going into 23, or a better market anticipating a better economy in 23? And that's pretty much where we're at the moment. You can see the confusion. They're still trying to figure it all out. Some think we're seeing the worst of it now. There's a Bloomberg thing, which I never really trust to begin with, but that came out this morning. They're talking about is 70% of the economists are looking for recession in 2023, and that's that lacking of stability, I guess. In other words, we already had a recession, but the same 70 economists don't accept that we had a recession in the first half of this year, and so I'm a little confused. If they don't understand that we had a recession in the first half of this year, how can they be predicting something that hasn't happened yet? So we'll see, and that's that combination again of a fixed market versus a free market. When you have that much influence. That's holding the markets up, keeping them kind of calm in a sense, or keeping them steady. That's really the answer that we're watching and trying to figure out at the same time. So, alrighty, let's get moving along. There is the dollar index, as you can see on J4X, and you can see there is the dollar index on Chicago Quant. That's the weekly. You can see on J4X, and it's been moving down, 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 and down. And we, over here on Chicago Quant, it's doing the same thing. It's going down, 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 and down. You just keep on rolling. All red hinky askies here. let's see what the green line today is doing. The green line there is 16, almost 17, and the dashed line is like underneath, so it's like at 10, 13. I'm sorry, at 13, whereas this is at 14. Okay, I see it now. There it is. So the green line is trying to turn up. We see that over here on Chicago Quant. We are in that daily buy. Let's see what it looks like over there on J4X. And there it is there. You can see it's daily sell. Okay, so what we got? The DXY has been in a daily sell now for a couple days. So it's been pressuring itself down. Over here, the indice itself. Let's see if we can turn that off for a second. See what the hinkies try to show us. What is that? Let's see if that does it. There we go. So yeah, you can see it. Popped up, stayed up. Now last couple days down again. Now today it's trying to turn back up again. Same view as this on some aspect, except for that seemed to close as an unchanged. Now this is the CME dollar index, which has two more currencies in it than the DXY. So they both have the same currencies, or maybe it's one more. They have one more currency in it. I think it's the Australian dollars in this. And then this one doesn't have the Australian dollar. I think that's what it is. It's like one currency off. But that is the action we're seeing. You can see here they are off their lows. In this case here, this did get driven down yesterday pretty hard. Let's see if we can turn on the Hinky Ashkies again. Are the Hinky Ashkies coming on? Show. There we go. And so you can see there it's bouncing around, kind of trapped in a triangle. You can see this type of thing here. There's a triangle developing on both of them. Oh, let me check the chat line. I haven't gotten to the chat line yet. Let's get to that chat line. I've been yakking for 7 minutes. I hope no one said, hey, I want to see X, Y, and Z. And there it is. And there we are. And do I hear me? Can you hear me now? What's going on here? Live trading by Doc, but it just keeps on spinning away. Oop, there we go again. Oh, there it is. Okay. And so no one's asked any questions yet, so that's good. Okay. Well, that's not good actually. I'd be very happy if people would ask questions. No one's asked any questions yet, so that's good. Okay. Well, that's not good actually. I'd be very happy if people would ask questions. No, too loud too. Too loud. Too loud. There we are. Okay, so there it is with the dollar. And the dollar, I was talking with someone last night at an event, and I was like, yeah, I'd like this. The dollar should be back in those 90s for those that follow the DXY. We should be seeing the dollar index. It should do that. We should see that type of action and get it back down. It at this point, it's just still way too strong. All right. From there, we're going to go over and take a look at the euro. And there it is right there, the euro against the dollar. And it's been hanging out and quiet. I guess the holidays are starting to catch up to it. We got the green line trading in the 32s, 33s. And the dashes are trading in the 35s. So the green line is still underneath. And we've got two greens there. So it's a lot of pressure on the product to go sideways more than anything else on a day-to-day basis. Let's take a look at it over here. I saw it this morning above the daily buy number. So that's pretty cool. Yeah, see it's flirting with it right there. See that right there. Widen it out so it looks better. There we are. So you can see there. Matter of fact, we should probably make that thickerish too. There we are. Yeah, you can see that there. It's trying to lift up. We're trying to get through the manifold. we're in that weekly buy now for weeks. Same thing over here. Let's see what the weekly looks like. Weeks upon weeks in the buy, that's for sure. Lots of green on the Hinky Ashkies running up. So, they're nibbling away, trying to sell the dollar a little bit here and there. It's the holidays. Things are going to get a little bit quieter. People are starting to walk away. Today's Wednesday. Tomorrow is Thursday. That's pretty much going to be like the last day of the week on some aspect, because Friday they're all going to be like, what holiday parties have not are going to be holiday parties in the office, or be a second day of just like puttering around. I need to do this. I need to do that. Luckily, Christmas Eve is on Saturday, so a lot of people are going to be trying to get things done in different ways. What's this? Huh. My sip of tea. That felt good. Now, I guess that's about it for the euro, especially with nobody saying anything today. Kind of quiet out there. I guess with Janos gone, he usually connects more people into the system somehow. 3 are watching, they say right now. All right, from there we'll go over to the cable. Cable looked kind of strong, I think. Was yesterday or the day before? I was kind of impressed. But I saw the Euro GBP still in the daily buy, and I was like, it's looking stronger, but I'm not seeing it. Right there. And that's the weekly. Oh, yeah, look at that. That's showing some weakness there on the weekly. Let's go back over to that. Excuse me. There it is right there. Okay, no, I saw that perk up yesterday. I thought, wow, right there. I thought, okay, maybe they're putting some life into it. But no, it's rolling over again today. So that's interesting. We got the cable rolling over. We got the euro lifting up against the dollar. So I was wrong. And you can see we've been in the daily sell from here, and it just does not seem to want to get out of its own way. At weekly, you can see the weekly has busted underneath the time manifold. Now we're just watching to see if it'll survive the zero line right there. And as you can see here on cable, it is trading at 81 on the dashed line, and the green line is trading at 66. So that's cleanly down. The green line is below. It's moving down. All right. Playing with that weekly sell at this point. And so we go to the daily and take a look at it that way. And there's the daily. You can see daily's kind of stumbling just as much as this is stumbling right there. Sideways. In a sell. This is trading right now. That's trading at 12 and change, and this is trading at 13. Okay, so the green line is still underneath the dashed line. And maybe over this 3-day weekend, I'll figure out how to put the two of them on the same screen. That would be kind of cool. Whoa, what was that? That was fun. I pushed that button just for the sake of it, just to see what happened. Whoa. And that's cool. Must be a way somehow to move down. See if that does it. No, they just move back and forth. I want to put them together. There must be a way of moving them back and forth. What's this one do? Show header. No, I don't want to show a header. But that's the... Matter of fact, what we may do is keep the one that's underneath always up on top. And so, I'm sorry, the one on top always on top. And then the one on the bottom always on the bottom. In other words, if it's underneath. Until we figure out how to commingle the two together. All right, from there we drift over to the Swiss and see what the Swiss is up to this morning. There it is right there. And you see the Swiss has calmed down too, just sitting there like in a triangle type situation. Again, the holiday's coming up, and so markets are kind of stalling out, and we're not getting a lot of action. And the stock market's the same way. I mean, everything is trying to lift on a very like as if the sellers have disappeared. That's what it really comes down to. It looks like the sellers have disappeared. The buyers are here, but they're not. They don't have much what I would call horsepower. They're not moving at any fast kilometer, that's for sure. A little sip of the old tea. All right, so there's that. You can see, and just this is the daily. Let's see what it looks like over here. Right there, and it's the second day of a sell. Ooh, let's do that. Move it over there like that because I'm not sure why it's not in there, but what the hey. There we are. So we're in a sell. We'll stretch that down again. So the pressure is on the product. Excuse me. Not big pressure, just some pressure. Yeah, I think what it really comes down to. Oh, there we go. Hey, Slice, how you doing? Mad Slice, I like that. How did you land a job as a hedge fund manager? I was never really a manager. Oh, wait a minute. Was I a manager? I had my own hedge fund where I was the head technician of it, deciding what to trade, basically, I guess you could say, or using my work to decide what trades. And then I worked for a couple major hedge funds as what they refer to as a soft dollar broker. And what they did is they ran trades through the brokerage house, and I got money from that. And that's how all those people use, what do they call that? Bloomberg. Bloomberg is mainly financed by soft dollars. And so, in other words, everybody in the major offices around the country are using a Bloomberg, and it's because they're soft dollared, and then the clients really pay for it, not the brokerage houses. And so my technical analysis, basically, my ability to be right way more times than being wrong. Matter of fact, there was one hedge fund, they said that they should have an asterisk since I made them somewhere a little bit better than $250 million using using 50 million. So if you want to be a hedge fund manager, I guess the best thing is to have a tool that makes you right way more than wrong and understand the industry itself. Do you have any experience in the financial industry at all, or somewhat, or you're trying to jump like atomic shells? In other words, you're trying to move to the next level. Oops, you're late. I'm late. It's like what was his name? There's a guy. There's a mathematician. I'm thinking of Alice in Wonderland, and and there's this mathematician who wrote all that for Alice in Wonderland, and his name was I'm trying to think of his name now. His name was Ludwig Dodgson. That's it. Charles Dodgson. That was it. And he had a pen name. Everybody knows him as Lewis Carroll. So was there a rabbit involved about being late? Did it have a top hat on? For a very important date. Exactly. And let me just show you a picture of him. There he is right here. And that's his real name. His real name was Charles Ludwig Dodgson. And he was a mathematician. And he was very deep involved in set theory and so forth. I remember having a discussion with, I think, a Nobel Prize winner in physics about that. He wanted to give Turing the credit for, the beginning of set theory and so forth. And I was like, whoa. So we were talking after the lecture, and I was like, I don't think so. Lewis Carroll, better known as Dodgson. Check out his math. His math back in he was born in 1832, and Turning did the Enigma machine in 1941. So that's like 100 years difference. This character here on the, isn't it amazing? They actually have some pictures of the guy too. He died in 1898, so they were able to take some pictures of him. Oh, what's that? 1 month went fine. Oh, what's this? Okay, my trauma be more atomic, but I've been trading for 4 years, although for FX Passion allowed me to test my algo for him, so when they pass, I can manage a bit of money for his hedge fund. Okay. 1 month went fine. Okay, that's good. And so, garbage day. It's too bad, Robin. I hear you. It'll straighten out. Give it the rest of the day. It's only early. So, you've been trading for 4 years. If you have some graduate degrees, that'll get you through the door, that's for sure. And trading for 4 years. Passion does what? Fibonacci and candlesticks? Is that what Passion does? Doesn't Passion do that? Right? Fibonacci and candlesticks? They're good tools. And never have they been better tools than now. No, took out the trash. Oh, okay. But, right, Kembo? That's what he does, right? Passion does Fibonacci and candlesticks combined together. That's going to get you somewhere, that's for sure. I don't know about getting you into a hedge fund, but that's going to get you into a better trading, that's for sure. Now, the rest of it is discipline, because you have to have good stops. If it goes through your Fibonacci and you're holding on for it to bounce, then you can get in trouble. So, but never have I ever seen Fibonacci and candlesticks work better over the last, since quantitative easing, since QE, since 2009, 2010, so forth, 2008. They've been very efficient, way more than they were pre that, Also, it depends on the type of hedge fund you're dealing with. You want to be a hedge fund manager in currencies. Fundamentals are kind of on the back burner nowadays. I guess it's like follow the pack type of thing. Whatever the pack is doing, you go with it, I guess, and then use your Fibonacci and candlesticks to justify, in other words, back testing. What's the percentage of success failure with the system that you've developed? Are you right 60% of the time, or 70% of the time, or 80% of the time, or do your stops protect you, or do they eat up 2/3 of your wins? 60. Yeah, it's a tough thing at 60. 60 is not that. I wouldn't invest in anything at 60. To me, I have to be up in the 80s and 90s before I'm throwing my money at it. And it has to have years of success, not 1 month of success. Years of success. But it's short term. Intraday, you mean? I don't think there's that many short-term hedge funds around. There's probably money out there for short-term traders, but I don't think there's the hedge funds usually are much more, year-over-year type of thing. 15-minute candlestick. Well, you know how I feel about minutes. I don't like minutes to begin with. So minutes are behind the curve. So go to spatial and you'll be better off. In other words, go to like 396 or something inside the Fibonacci itself. In other words, use Fibonacci to do Fibonacci. 15 minutes is not Fibonacci. It's not even. Think about it. Fibonacci is a quarter of an hour, right? Fibonacci has a 0.23 or 22.8 or something like that. It has a 0.318 It has a .612. It has a .50. Use a 30-minute. I would imagine might be better. And even then, that's only a 50% of an hour. Again, I've shown so many times here that minutes are so far behind spatial candles. My point is, you will have a sample of 300 trades in a month to see the win. A month is nothing. If you want to work for a hedge fund, you have to have years. Good, then just change it to spatial. Get rid of that 15-minute. I can tell you for a fact, I show it so many times here over the years. Not weeks and months, over the years. For 10 years I've shown minutes do not outpace spatial. You have to do ticks or contracts. And in FX, it's ticks. Here. Let's just show you. Right there. Right there. Okay. Here is 286 ticks. So it's 2/3. It's a .618 of a Tesla. All right. Right there. And that's with my math in it. Okay, so it goes into the buy here, and it stays in the buy all the way up to there. I think it goes into the sell off of this one, maybe? Right there. And then goes back into the buy on this, and then goes into the sell right there, which is that, and then it goes down in value. And what was that? That was 12:21. Is that right time-wise? No. 03:23 and 42 seconds. And it makes its money 03:33 56 seconds. So within 2 minutes, you've got your money and you're out back at the pub. Let's see what Kimbo says. All right, so let's see. Kimbo says, and my algos, okay. Private CTA would work as well. Yeah, private CTA makes more sense too, but not a hedge fund. How can I wait years to trade for hedge fund when I can already make money today? Well, then if you can make money, you can make your own money and you have your own hedge fund. I'm 22, man. I can't wait 10 years. Oh, well. If you can make money, why do you have to wait? You're making money. And it's for a bit of money. Well, keep on putting that bit together. The next thing you know, you're making more money and more money and more money and more money and more money. Then you have your own hedge fund. Then you don't have to work for anybody but you. Probably, or maybe 1% at the first year, probably. No, hedge funds don't want to hear the word probably. That doesn't even, you can't even use that word out loud. You want to make more. Of course, we all want to make more. That's no problem. I agree with you. So be diligent and you'll make more. If you're already making money, then keep on making it. And there's all these advertisements. I see these advertisements for people, trade our money. Trade their money. They're all over the place. But you're not going to break into a hedge fund with 1 month track record. Not unless it's your dad's hedge fund or your mother's hedge fund. That type of thing. It's got to be family. Or best friends of all time. And at 22, they like young people because they're going to want to work you, for 12 to 14 hours a day. So, okay, so here is a spatial. Now let's look at the same chart. Let's make a copy of this. And let's put a 15-minute chart up on that. Paste. There we go. Let's see, minutes, 15. And let's go back, I don't know, 3 days or something like that. There we are. Now let's see if we can put them together. put them sideways to each other. So we'll put this one there, move it over to the middle, like so, and then put the spatial one, or they're both, I'm not sure which one's which at this point, we'll tell you in a few seconds. So one is 15-minute, which one's 15-minute? This is the 15-minute right here. Okay, there's 15-minute. And let's see. And so then you can see here, the spatial is here. Went into the buy at 7:34. This went into the buy at 7:30. Okay, that's cool. That's beating it there. And went into the sell here at time is that 05:45. And we went into the sell here at 05:52. Minutes are winning, so you got a better system. There you go. I don't know if it has to close on that. When's that close? So is that is the close of 106.19 at 7:30. And what is this? Is that closed or is that still open? What's going on here? So that is, am I behind or ahead? Is it behind or ahead? That's the question. So it says 8:15. Oh, I see. All right, so that is still ticking away. It's 8:03 right now, but it's telling us that if it closes there at 8:15, okay. So these are behind. So that closed at 7:30. That closed at 7:45. That's closed at 8 o'clock. And you're doing it as candlesticks. Let's see what we can do about that for you too. Because you're winning and I am losing. Let's see. Style. Candlestick. There we go. So when it went green here, were you long at 7:15? At the close of 7:15? Is that what that was? Well, again, if you're making money, make more of it and you'll have your own fun. That makes total sense to me. This way you don't have to work for anybody. So you can see there, so were you long in the euro at 7:15 this morning Eastern Standard Time? Does your math tell you to be long there? Because there's a green candle. And then did you get short here at 5:45 Eastern Standard Time? And did you get short there at what's that, 4:15? I was trading it manually today. My algo doesn't trade euro. Oh, okay. What are you trading? What product? What currency are you trading? We can put another currency in there. Oh, New Zealand. Okay. We'll put the New Zealand in there. NZD dollar. There it is right there. There's the 15-minute. So were you long? When did you get long in there? At 7:30 Eastern Standard Time? And let's put that over here. You were short, but you didn't get long. Can you explain to us what process you're using? In other words, ours has been long since 7:25, 7:25, and there you got a candle at 7:30. So you got a red candle there. So you're riding the short right now all the way up? Okay. Where are you short from? Are you short from like back here or like all the way over there? You know, like all the way back at yesterday or something like that? Or I don't really care how your algo works. Just tell me where you got long or short. That's all. You've already told us how you're using Fibonacci and candlesticks. That's plenty for me. I don't need to know anything more than that. Early today. Okay. Was that where you got short? At the 2:45 Eastern Standard with the red candles? Or where'd you get short at? Just a general. Patience is roughly it trades in pieces. Okay, like averaging. You're saying you're averaging into it and averaging out of it. So four shorts earlier today. Okay. Well, it's been going down most of the day, so that's pretty cool. You were on the right side of that. Now, do you sell short when it's going up, or are you selling short, or what we refer to as cannonballing, or do you go short more? In other words, you keep on doubling up when you're short. So in other words, let's say you're short, and it's trading at 63 even, and then it goes down to 62.90. Do you sell more, or do you wait till it goes to 63.10? You do cannonballing? Okay, it's going to be tough. Yeah, cannonballing is very. You got to take your profits extremely fast, and have stopped at least half profit and then half break even. The only way to straighten that out. That'll raise your 60 percentile up higher. Still riding along, isn't it? Well, the 15-minute is on a fourth green candle. That's pretty cool. Right there, you can see that. Our math even says it's to be long there at 7:30. Over here, it tells us to be long at 7:25, right there. And the minute one says to be long at 7:30. Well, I think the best way for you to do what you want to do to get into a institution like a hedge fund is get a couple more years of experience, keep on making money, and you'll be there. By the time you're 25, you can be in, or 24 or 23 and a half, something like that. You'll be in there. 85, 85%. So, but don't say probably things like that. Hedge funds are not too comfortable with that unless they're literally an intraday fund, which is so rare to see. But there is tons of money out there. It seems like for intraday trading. So, you know, just don't think you're not. Don't aim at the hedge fund industry as much. Aim at the speculative groups that are offering cash for trading. They want people to trade their money. I see it advertised all over the place. I'm sure if you Google that, you're going to find a couple different groups that are going to offer you opportunity. But they won't be a hedge fund. Hedge funds are really just aggressive mutual funds or something like that. I think that's the best way to describe it. They try to play both sides of it. Alrighty. I hope I answered your question. I say, what's the win rate? Okay, yeah, the online prop firms. Yeah, exactly. I have an account at one of them. Well, then there you go. You're on the right road. I mean, you're talking about intraday trading, so you know what they call that? They call that fast money. So, in other words, or hot money. They're looking for somebody that can generate a bunch of profit for them fast. And then wow, this thing's really taking off. We started looking at this. It was at 62.90. It went into a daily buy on our work, or intraday buy. So, I mean, this thing's jumped all the way up to 63.18. 28 ticks. That's pretty good. Yeah, hot money, fast money. And just keep on doing it. That's all. You're there. Just don't show the impatience. They'll respect you less if you show them that you gotta have it now. They accept the idea that that's the mentality they're looking for, but you're not supposed to tell them that. They just want you to trade, aggressively. So, I hope that helped you. All right, where did we leave off? I forget where we left off. Let's go see. I'm going to minimize both of these in case you want to talk about it a little bit more. Oh, there you go. Look at that. Stock market's moving up even now. Here's the S&P 500 taking out like a 2-day high or 3-day high, maybe? 2-day high. Not a 2-day high, but going after 2 day. It's at the highs of 2 days ago. That's what it comes down to. Let's move this down. Yeah, yesterday the high was in the Asian hours. It was up into the 92 area. So you're more calm nowadays. That's good. Impatience, although it gotten better over the years. I've seen all kinds on the trading floors. Robin can say the same thing. We've seen guys that are impatient that do really well because they stay focused. But if they step out of their focus, then they get in trouble, But the impatience can be a positive when it comes to intraday trading. Because we used to have this one friend. I used to have this one friend on a couple trading floors. He was in Chicago and Philadelphia. And we used to call him Rambo. That was his nickname. And because he could just execute at a second's order. And he would walk around looking at charts. And back in the days when you traded 10,000 shares of stock, which was a lot back then, now it's more like 500,000. But back in the day when 10,000 meant a lot, back in the 80s and the early 90s, he would walk around going, okay, I'm going to get long this if it breaks this trend line. If it breaks this Fibonacci, I'm going to get long it. I'm going to get long it. I'm going to get long it. And as you're walking around the trading floor, trading in different areas, I would see up on the tape that particular. I would watch that stock and look for the number and so forth. And I'm doing my own trading, and I see it break, and when I get back over on that side of the floor, I'd go like, "So how'd you make out?" He goes, "I'm short it now." I said, "Wait a minute, I thought you said you were going to get long it if it broke that number." He says, "I did. I bought it. I bought 30,000, and I made like 12 cents, and I got out and I went short." That's okay, but he could walk around for like literally hours saying, "I'm waiting for this number. I'm waiting for this number," and he had this just. That's why we called him Rambo, like in the movies. Rambo, First Blood, and all those other movies. Because he was brave like that. He was aggressive like that. So impatience can be good, but you have to follow your rules. In other words, the stuff you're working with passion, keep on following them. As long as they're making money, keep on following them and stay disciplined. Don't just change your mind in the middle of it all. He would follow his rules. It would go through his number. He would buy it. Next thing I know, he saw that it showed weakness and it broke those numbers, and he would get short. And so he had not talked about being short at all. He talked about being long, or he talked about being short. He never talked about being long. But he would play both sides of it. When it threw the Fibonacci and failed, and that would make him trade the other side of it. And he had the ability to do that very comfortably. At one point, I think he traded on the SIBO. I guess it was like Amazon or Yahoo or something like that. I think it was Amazon. He had that stock, and they had what they called board brokers, and he was very successful. He ended up selling it off to Susquehanna for like $3 or $4 million. So, yeah, just hang in there, Kimbo. I haven't seen you in a while. Glad to see you. Thank you for stopping in, and you're welcome to ask any questions anytime, even more today if you choose to. All right, let's go back to currencies. Unless Kimbo wants to see something, we will go back to where we leave off, Swiss. So let's go from the Swiss to the yen. The yen's still moving down, as you can see. Actually, it's flat today after yesterday's slide. Let's put it up on J4X. Let's see. Yen. Right there. There it is, yen. What is that? That's daily. Okay. Oh, and Kimbo says, no, you helped me out with your knowledge. I'll forever be stopping in here. That's cool. Thank you. That's so nice. Thank you. All right. So there we go. There's the yen. And I thank Kimbo for giving me a compliment this time of the year. Man or woman. Don't know who it is, but it's quite all right with me. Kimbo. I like that. Like the white lion, Kimbo, right? That's what it was. We had a cartoon. It was called Kimbo, the white lion. Okay. So, there we go. Reconnect again. Let's minimize that again. Let's see. Reconnect. There we are. Now, on the yen, you can see that wild dive down. All right, enjoy your meal. Talk to you later. The yen has been interesting. We talked about that yesterday, fixed market versus free market, and how a committee works, that decided what was going to go on yesterday or 2 days ago. And that really started me off on this magical tour of, trying to understand, how government policy can put these moves into the market months ahead of time. So there it is there. Let's see what the weekly looks like. And there is the weekly on J4X. And you can see there, and over here on Chicago Quant, you see the same thing. You see it, in that weekly sell for a bunch of weeks, just like it's been in a bunch of sells there. And that pressure is on. Is it curving enough? Let's see. It's at 18 on the dashed line, and it's trading at 22. So we're getting movement. The green line is piercing through the dashed line at the moment. You see we have a little curve there too going on a daily. On the weekly, it don't care. It don't care. It's like a honey badger. It don't care. And it's matter of fact, it's dropped underneath the manifold again. So I'm not sure how good this bounce will be on the upside. I kind of think it still wants to keep that good, comfortable trend on the downside. But we'll watch that and see how they play that out. Now from there, we jump over to, from the Turkish, we go to the Turkish lira. What do you put on your pizza? There's a good question. I put cheese, extra cheese, and then extra cheese, and onions, sauteed onions, and then I like if there's some meat, I like some pepperoni or something like that, or beef or sausage. I wouldn't mind a little sauteed eggplant on top of it. Oh, you know what's really good? Cabbage and carrots sauteed with onions. Oh my God, that's like eating candy. Let's see, let's go to the Turkish lira. We're going to go to the Euro Turkish lira this morning. We've been steering clear of the dollar most of the time. We'll wait till next week to look at it again. And let's get it up on here. And there it is, the Euro Turkish lira. You see it's holding up. Tried to go into a sell and failed at it there. It gave us a green and a red, so it's been in that buy since back in here. And it's moving up. Weekly buy is looking very firm right there, so that's no surprise. And over here, you can see there's the weekly just flying the same way. And then let's take a look at the daily. The daily is trying to go in and out, but now it's definitely in on the upside. So right now we're seeing a 49 on the dash line, and we are seeing a 56. So we should move that to the top. Let's see, which one is that? Move up. So it's on top now. The green line is ahead of the dash line. All right, and then from there we slide over to, we'll combine it together since we're running out of time here. But what we will do is we will go to the South African rand to start off. No, we'll do energy. Let's do energy real quick. So then what we'll do is we'll go to the Canadian dollar, and there's the dollar CAD right there, and you can see the daily it's pressing down, and then we'll go over to here and look at oil, Earl, and there is Earl oil. Right there, and there is the front month. You can see that's moving up, and it's trying to get into a buy. And you can see the weekly is even flirting. It's 14 plus at the moment. Look at that. We're getting into some buying going on there. Then we'll go back over to here, and we will put Brent in there. There's Brent. Brent doing the same thing. It's over the 80s now, and it's pushing up. And over here, we will put in the Canadian. We'll do the reverse of it. And we'll look at some energy at the same time. And there's the CAD. You can see the CAD is trying to go down, what it's supposed to do when oil is trying to go up. That makes total sense. Now, let's take a look at natural gas. And there is natural gas in the United States. No, what is that? Gas CMD. Oh, yes, that's it. That's gas. It's trading at basically almost $5.50 a cubic foot, where we here in California and Europe, it's trading in the high 20s and 30s. Over here, we'll put it in. And there is natural gas here. No, that's not natural gas here. Like that. There's natural gas right there. And you can see it's lifting up a little bit from yesterday. They took it down to 520, what is that, 525.60, and today it's trading around 550, as you see right there. So it's lifting up a little bit from yesterday's sell-off. Very nice. And then we go over to the oil company in Spain that we follow. Where's that at? Gas right there. There it is. And that's trading at 25.33, trying to break the 25. So that's a really good sign when it comes to the cost of natural gas in Europe. Now, we drift over to the other side of that. We go to gold. Let's see what gold looks like this morning. Last I looked, it was just a little bit underneath its close of yesterday. Right there. There's gold. 18.18. And let's put the South African Rand up on the screen here. Let's try that again. There we go. There's the South African Rand. And it's still trying to move down, stuck in that political triangle. But it's still trying to move down. And gold must be trying to move up. We'll see what it looks like over here. Go like that. And we go like that. And there is gold. And you can see gold is unchanged now, trading at 1827 in the futures contract out in February. You can see it's in the second day in a daily buy and still cleanly in that weekly buy. And over here on J4X, you see the same thing. It's moving up. There's pressure on it on the upside. The green line is trading at 70. The dashed line is trading at 48. So it's definitely showing strength, 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 and strength. Now let's take a look at XAG. Not there. This is silver. We'll go through the metals the same way. XAG right there. You can see silver trading over 24. Let's put silver up on... Where's silver at? Oh, there it is right there. So there is silver right there. Now it's down just a tad from yesterday. Nothing major, but this is the March contract. So just down a little bit, but holding up fine. It's still in the daily buy. You can see it there. It's in the weekly buy. You know, it's not giving it away, that's for sure. Let's see, what else we got going on here? From there, we're going to take a look at copper. There's copper on Chicago Quant. It looks about the same as silver. Now it's flat. Before it was a little bit down today. Now, and we look at it here. Copper, copper, copper. Right there. And you can see, you know, it's trying to lift up here. We got the green line at 30. Was that 30? 40. At 40. And this is at 27. So they're showing some strength in there. You can see it bounced off the weekly here and is lifting back up, and we're in a second day in a daily buy there. So the metals complex is showing some buying again. And then, let's see, where else do we go? Let's check out that platinum. Because the platinum yesterday looked like it was getting ready to bust through the weekly buy number again. So let's just check it out one more time for Wednesday. Wednesday, Wednesday, Wednesday. And there is platinum, usually the leader of the metals complex. Nah, it's still sideways down, you know. I mean, it bounced off of that low there on Friday. Is that Friday? No, that was Thursday. I mean, that's Monday. I'm sorry, that's Monday. So they sold it down last week, pushed it into the sell. We should have that sell line in there. Let's put that in there. We're really looking for that to turn up, to tell us to get into the, you know, the metals much more aggressively. I mean, they're in daily buys, no doubt, and they're in weekly buys, so obviously you don't want to sell it, that's for sure. And we would like to see this get into the weekly buy. And then I think they're going to put another leg in on the upside. All right. Maybe we'll use that as the title today. You know, maybe another leg in the metals. It has that look to it. Out of all the things that are going on with the real estate problems in China and all the other odd things that are going on, you know, bond interest rates are kind of flattish. I mean, right now bonds have gone up for the last couple of days. Let's just show you what the bonds have been doing. Here is the 30-year. You see the 30-year is pretty much unchanged in a sell for 3 days. And then you can see here the 10-year right there, same thing in the March contract. It's actually lifting up now. So interest rates are dropping a little bit in the 10-year more. So that's pretty good. Both in weekly buys with no problem. But we would like to see them try to turn that back up again. Seems like a plateau here. So if the interest rates keep on just staying sideways over the next couple of weeks and we see platinum get into a weekly buy again, then I think there's another leg on the upside of this whole product. I really do. I expect to see something like that. So anyhow, I guess this is the end of it all. Unless anybody has a question, we will call it a day and then be ready to go tomorrow. Bushy, bright-eyed and bushy-tailed. So, no questions. Oh, here's Kimbo again. It's just with mushrooms, onions, and ham. Oh, that's just as good. I like that. I agree with you. Yum, yum, yum. Yum, yum, yum. Extra cheese never hurts. All right, guys. This is Doc from North America. Catch you all tomorrow on Thursday. And so, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.